Joe, take a look at this chart. Do you know what this is? This is an unstoppable freight train, trend train of the market. And you know what, Joe? It can never go down. It only goes up. Stocks only go up at this point. If you ever think that the market's going to go down, you need to get your head examined. Okay, let's be realistic here. It's never going to go down. This is a new paradigm. It's different this time. Stocks only go up, apparently, right? Or at least that's what it looks like right now. And then you've got the Nasdaq, which is up even more biglier, right? Pushing brand new all-time highs every other 5-minute candle. But Joe, you know what was really surprising to me was taking a look at RSP. This is equal weighting S&P 500 versus market cap weighting S&P 500. And let's compare the two. One of these things is not like the other. Holy moly, right? So in fact, the high on equal weighting was February 12th. Let's put that same line over here real quick. Let me get a line going. February 12th was right here. Now, we have not hit a new all-time high on equal weighting, but we have absolutely destroyed all-time highs in the S&P 500 because it is a market cap weighted index. And in fact, let's take a look at what happened today. What happened today? Nvidia, you son of a gun, going up 11% today, right? I mean, I made some money on it, but I didn't make that much money on it compared to what it would have been. Micron, is this today? Oh, this is 1 week before. I was going to say, if this is today, that's unbelievable. So the 11% is the 1 week performance. Let's just do the today performance. That's what I was looking for. 1 day performance. 2.4% on Nvidia. Totally normal. 8% moves on Micron. Totally normal. 8% moves on Qualcomm. Dude, yeah, Nvidia can go. I mean, we made money on it, right? We made money on it. It just wasn't. We got out before the big move really started to kick off, but it's fine. It's fine. It's part of the game. It's part of the game. But this is the 1 day move today. I don't know, dude. Not super broad base. Where's money coming out of and where's it going to? Going into Tesla, into Nvidia, going into the semiconductors. As we know, these are absolutely on fire. In fact, Joe, I just want to look at the last month. 1 month performance. In 1 month, Google's gained 23%. In 1 month, Tesla's up 28%. In 1 month, the Micron company has doubled. In 1 month, Intel has doubled. In 1 month, AMD has almost doubled. Qualcomm almost doubled. Totally normal moves, Joe. Absolutely nothing to see here, folks. Nothing to see here, folks. Certainly nothing to see over on RSP versus equal weighting versus the S&P 500. In fact, new chart, brand new chart as of right now. Hold on. Brand new chart. We've never shown this before. This is RSP divided by SPY. Hey, like this. Chris is doing his best to make these new consulting sessions great for you. So when this is falling, which is what we see right now, RSP divided by SPY, mega cap weighted SPY outperforming equal weight. Narrow rally, mega caps carrying. It's exactly what we see. It's exactly what we see right now. Falling while SPY rises, which is literally today. Narrow leadership, be selective, and use caution. That's where we are right now. It's narrow leadership, be selective, and use caution. Yeah, this is not a normal market. You know what else is not normal? SPY being up on the day, and then the VIX being up on the day. Joe, do you know what the VIX measures?
Volatility, I believe.
That is correct. It is measured, actually, it is the volatility index, but the measurements come from the put buying activity on the SPX index. That's how this is measured. Okay. So we can see put buying activity on the SPX index is starting to grow. And then speaking of puts, let's go to the PCC. This is the put call ratio over here. How's this doing? It's still very aggressive call buying, right? And you can see when it's trending down, we can get into more and more call buying. We've been trending down for a minute since all of April. And then as far of May as we have so far. What about skew? Skew right now continuing to fall, right? It's picked up a little bit today, but it's continuing to fall. Tail risk demand is easing, right? So less puts are being bought. Traders are less aggressively paying for downside protection, meaning puts are not very expensive right now. Puts are not very expensive. And then we go to MMFI. MMFI is the percent of stocks above their own 50-day moving average. Joe, is it helpful to have these little like captions up? I feel like it is. I feel like this is going to be really useful, right?
But we can see MMFI. I'm gonna steal them. I'm gonna put them in my chart.
Do it, dude. Absolutely. I wish I could share this around. I don't know if I can. Can I? Is there a share button where I can just share this over?
I know there's an outlier that will have the answer to that question.
And I love smart people. So MMFI is continuing to grow, which is a good thing. MMFI is the measurement of the percent of stocks above their own 50-day moving average. We're at 63% right now. That's really good, right? Broad participation is improving. Now, we saw RSP versus SPY is definitely telling a different story than MMFI. Now, here's a new one. You've probably never seen this before. MMTH, the percent of stocks above their own 200-day moving average. I like that. Never used that one before. The percent of stocks above their own 200-day moving average. So we're seeing the intermediate term of the 50-day and then the long term of the 200-day. Both are growing. This is at 56% right now. So it's not that this is a bad market. Don't get construed here, right? This is actually a pretty healthy market with the number of stocks above their own 50-day and number of stocks above their own 200-day. What's not normal, what's not healthy here is the fact that the mega caps are driving huge gains. Like I said, what was it? 100-something% on multiple different stocks, right? And they are absolutely carrying the index, the market cap weighted index higher. Mm-hmm. Now let's jump over and talk about bonds, right? The market is one thing, but let's also talk about bonds, right? The 2-year, which is what we're looking at first, is where the bond market votes on the Fed. So you can see right now it's growing. And what does that mean? Fed pressure is rising. The market expects the Fed to stay tighter for longer. So we can jump into the CME Fed Watch tool. Joe, this is so fun. I really took a hard break for at least a year on my consulting activities. But you know what? Now it's time to pull that stuff back out. Because what we can see right here is by year end, we're actually expecting a greater chance of rate increases versus rate cuts. We're only at a 66, a 2/3 percentage chance that we are looking at rates staying the same.
Okay.
Yeah, that's what they're voting on right now with the US 2-year. And then the 10-year, this is support for stocks right here. Well, I'm sorry, I should say it the other way. When the 10-year is rising, right, you have the opportunity, Joe, to invest in the 10-year or invest in stocks. If this is rising, stocks become a little bit less enticing. Now, granted, we're talking 4%, right? It's not like it's 17%. If it were 17%, the market would be absolutely trounced, because why would you put any risk on whatsoever when you're going to make 17% a year? Does that make sense?
Yeah.
Mm-hmm. Yeah. So this is pressure on stocks as it is continuing to rise up here. The 210 split, the 210, there's a word for, I can't think of it right now. The 210, the 10 minus 2-year is what we're looking at right here. This is not showing an inverted yield curve, but it is moving in that direction, right? An inverted yield curve often means a recession is on the horizon. Doesn't always predict it, but the 210 split is working in that direction. And then lastly, the dollar index, right? The dollar index is falling, and that means it's support for commodities like gold, silver, oil, and copper. So if stocks are rising, yields are rising, which is what we see, and the DXY is falling, I don't have that situation right here. I would probably say a very narrow setup, which is what we're looking at right now. So speaking of commodities, let's go over to those guys using a different view. Here, we're going to look at gold. Gold finding a bottom right here. You can see it created a new outlier block, right? Almost right above that outlier block right there, but it is running into a brand new outlier block right on top of it. So just be aware that this could have some overhead resistance. Silver had a huge move. MJ Carney and I were sitting next to each other. He had his pen and paper out. He was doing all of his calculations, and he bought silver on Friday. And now bro is obviously making a ton of money. So silver is doing really, really sharp. And, you know, it makes sense when you've got all this support down here ready to help push it up higher. And then now it's running right in that wall. So just be careful. If you're long silver, you might have a lot of overhead resistance right here. Pushing past 91, which is not all that far. We're talking $5 from here. You've got some from free skies, clear skies until 102. There's MJ right there. He's very happy with the silver. And then we've got copper. Ooh, copper is on the move, Joe. This is the one to watch right here. Copper is on the move, right? If it can break through this all-time high. Now, anytime you see a big wick like that, that means buyers were there, but sellers came and absolutely monkey hammered them back down. A close above that would be what, Joe?
Bullish.
Yeah, there we go. Bullish AF. Bullish AF. So we'll have to see on copper right there. And then oil, this is a good gauge for inflation. Looking at this right here, we can see a lot of overhead resistance, and it's just trying. It's trying to push up higher. But listen, the Strait of Hormuz, we have no idea what's going on over there all the time right now. And that's the big news story at all times, right? Who knows what Trump is going to do? Who knows what the Iranians are going to do? Oil is very volatile at this moment. And if you are trading oil, just trade it smaller than you normally would. Now, Joe, I want to take a look at the risk on sectors, and we can look at technology over here, communications over here, but this includes things like Google and Netflix. Right here above our heads is the discretionary sector. And then lastly is the financial sector. Now, financial sector is not keeping up with everybody else, but the risk on sectors are showing risk on for sure. And then we can go to the risk off sectors. This is so cool. I can click one button and it even changes the charts. I'm very happy with that. You've got the energy sector, which seems to have found a bid right here where that order block was created. And then you've got the utilities and staples. Both of these two are areas that if these start to run, if they start to go up, that's bad for the market. But you can see the market don't care. The market does not care whatsoever. It is going to run higher and higher and higher. So, Joe, let's jump into what's going on for earnings this week. There's a ton of earnings going on this week. If you are trading any of these, just be aware that this is an elevated area of risk, and nobody actually knows if they're going to go up or down. So just be aware. What's on here that I thought was interesting? You got GoPro on there. You've got Cisco Systems on there. You've got a lot of these I don't really know. Rumble is on there. You got Alaska Airlines on there. Yeah, quite a few different ones coming out this week, so just be aware. Joe, let's jump into market breadth inside of OVTLYR. And you can see right here that we just aren't getting the number of uptrends ticking up. We're just not getting the number of uptrends ticking up. In fact, we're getting less uptrends, more downtrends. That's what I see over here. Still don't have that bullish crossover just yet on the number of buy signals versus sell signals. I thought it may be coming, but it seems to have stalled out right there. So just be aware of that. Taking a look at the market, we got that buy signal in place. So we got the bullish trend. We have a buy signal, but we don't have that breadth. We just covered that. Let's go over to Nasdaq. Also has a huge buy signal pushing up higher and higher and higher. Don't get in its way. Don't get in its way. In fact, if you look at the constituents in Nasdaq, it actually is all green except for the market breadth. I didn't even realize that. Now, several stocks that people have a lot on their mind. Micron got the buy signal on April 13th and has run. Let's go see how far it's run since April 13th. Wait a minute. Gotta change my view real quick. And then we'll go to Micron. Not my. Daggum Joe, learn to type. Micron. There we go. There we go, right there. So Micron, let me remove this, is only up since that buy signal. It's only gone up, I don't know, 90% since that buy signal. So super solid move coming out of Micron. What about the next one, Nvidia? Oh, I know this is going to hurt some people's feelings, but this is life. This is life, right? Here's where I got in. And it went up, came back down. I got my exit signal. I got out of the way, and it shot right back up, Joe. It shot right back up without me, and that is part of the game. Unfortunately, that's part of the game. But yeah, Nvidia is looking to close at new all-time highs, which we get to do it one more time, Joe. Nvidia is looking to close at all-time highs, which is what? If you said bullish AF, that was the right answer. All right, let's look at the next one here. Nvidia. How about Tesla? Tesla was one of those that is making some moves lately. April 20th got that buy signal, pulled back a little bit. The moving averages crossed over, and that was a solid entry point right there, because once the moving averages crossed over on Tesla, let me mark on here where the buy signal came. That was this one here. Buy signal came on the 20th, April 20th, but the crossover came on May 1st. So April 20th was right here, and then the crossover happened 10/20 price over 50 right here on May 1st. And yeah, rocket ships. So if you were trading this is what you're looking for, the buy signal, and then confirmed with price of 15% in the span of a few days. And Intel, this is another one of those stocks that's been absolutely monstrous from April 6th to a sell signal today as of right now on Intel. So if you're in Intel, Monday, May 11th, the day I'm recording this, has a sell signal. Does that mean it's going to crash down? Not necessarily, but it does mean that investor behavior has reached an extreme and it might be time to take your profits because you're probably up 150%. You're probably up 150% at this point. So it might be a great time to take your profits.